Well, we're having technical difficulties today with the software, but while I'm trying to figure that out, I'll take the 2650 short. I typically don't like to sell in the middle of the mean, but there's a lot of cross trade up here. Well, we've been patiently waiting here with our 2650s. Got up to the 2950s. There was some cross trade, some two-sided action. We have a 6 TPO congestion area now, A, B, C, D, E, and F periods here. I'm looking at the close on, what was that day? The 24th? 24th, 23rd. No, the 22nd. I'm looking at the close of the 22nd. 1308 is a potential target. That would be below today's low. Close to Globex is low. See if we can get that down that far. But we're going to try a little bit different strategy today. I usually take 1.25 points on our first contract before we put our stop in at break even on the second contract. I'm going to try to take 2 points on the first contract, and when we achieve the 2 points, we're going to put our stop a point above or below our break even, so that if we get stopped out, we still get the point or 1.25. And if we don't, that'll give us 2 points, increase a little bit of our take on the first contract, and leave our second contract at maybe 5. I'm going to try that today. Well, I am way on the wrong side of this trade. I should have taken my own advice when I said I didn't like to buy in the middle of the consolidation, the middle of the mean. That was a bad choice. And here I carried my 2 contracts up 10 points. So we're going to look for a average in here and get out for even somewhere. I'm going to see if they test the high at 38. No, actually, that's not right. 38.75 was it? 39.25. See if they test the high at 39.25. They could run the stops up to 40, 41. So we'll keep an eye on this range. Let's see if we can't get 2 positions, which I actually am trying to avoid. But with this bad mistake and the software not working, probably shouldn't trade it today at all. Certainly in a losing streak the last few days. I think it's time for a break. It seems like my decision-making process is not as astute as in January. The H period just opened up. We're going to take the 36s here. I would have liked to got the 37s, but we're going to take the 36s now that the H period opened up. Our out for even on all 4 contracts is 31.25. That's our target to get out of this losing trade. What I don't like about averaging in up this high, even though it gives you a better out for even, is now we're carrying 200 points above our average price of 31.25. That puts us at a $1,200 loss right here at this point. As soon as you average in with the second set of contracts, if it doesn't drop immediately, it puts you in a very difficult situation. That's the beauty of what we're doing with the simulated trading with the analyzer. It really gives you a very insightful analysis as to where your strengths, where your weaknesses are, all this kind of stuff. The only thing is, it seems that there's going to be, a duration, could be upwards of a year before I can draw any significant conclusions or even feel comfortable risking real money. So that's a really interesting exercise. That's good. We've made money in the markets before, we've lost money in the markets before, but due to a variety of reasons. So this is a really interesting exercise. It's going to test endurance and love for what I do, absolutely. And that's a good thing. Boy, if only I'd have waited for that opportunity to sell up at the G period high and not get involved with that crazy trade earlier in the mean. We're headed down toward a break even at 31.25. Getting close to our out for even. We clicked at 31.25 but didn't get filled on the ask on the buy side. So let's run the video and watch this for a little bit. It's a killer to get in a bad trade at the mean like we did, and then sell right at the high. And when you're out for even. That's a good thing. Prevents a significant loss, which we've had a couple lately. But on the other hand, there leaves some residual emotions behind also, that you missed such a good opportunity, and even taking half of the opportunity you know, now you're out for even. That's tough to reconcile, at least in my mind. You know, it's something that I've done in the past, something that I'll probably continue to do instead of just liquidating the position in a market that appears to have broken support yesterday and is trying to balance today. Um, Still, you know, your thought process goes to, wow, you sold the high on the H period. You know, you sold the high of the intraday. You know, great job. And then the other half of that equation is, geez, you got, you know, short in the middle of a consolidation for, you know, no real particular reason, especially for something I've been complaining about that I've been doing lately is just basing trade decisions on cross trade and, you know, sort of missing the broader picture. In the consolidation, you know, it's 50-50 of going up or down. So, you know, we need to continue to focus on asymmetrical opportunities. I guess that boils down to patience. But anyway, hopefully we get filled on the 31.25s here. I don't see a reason why we shouldn't get filled on the 31.25s. There is support of the 32s, but we, you know, broke under the 32s, and we see some activity on the bid here. I'm not sure I'd classify that as any kind of cross trade, because there's, you know, consecutive 18, 27, 1,000 coming off an asymmetrical opportunity. Maybe earlier I would have bought that, but you know, I'm not going to buy that now. I think we're at least headed back down toward the mean in the 28s. I'm not going to stick around till the 28s. We're going to take our advantage, our opportunity to take advantage of it at 31.25 as soon as we take down there and get filled. Let the video run here, and we'll wrap this video, so we'll let it run until I get filled. The trade on the spiders today is light, and this 30-minute bar in the H period, we're building negative delta, about 8,000 negative delta. So those two things give us confidence that we will get filled at 31.25. It's amazing how close we come to our targets, whether it's an arbitrary target like this, an averaged in target, or if it's an area that is identified by some other for some other reason. Boy, it's not the first, second, third, fourth, fifth, sixth, seventh, eighth, ninth, or 10th time that that's happened, that's for sure. So we'll pause the video and wait for the fill. We're rallying at 32s, 33s here a bit. See, now in retrospect, that was, I guess, cross trade, 28, 1,000, 1,000. And look at that, we bounced up 3 or 4 points from there. You know what's interesting, I just noticed, was the cross trade down here, these 3 price levels, the 31.50 to 31.75. 32 had 1,234 on the bid, and that's on our chart with the 100 filter, so that activity is 100 lots or greater only. So, you know, based on that, I'm going to watch that over the month. That if you were just a scalper looking for a point or two, that's the area to buy, no doubt about it. Look at that, I stepped away for just a second and the market ran all the way above the H period high, above the B period high by just a tick like we had talked about earlier. And on relatively light volume, hundreds here, you know, so that area now that is off the screen down to the 32s that we talked about, seeing the cross trade that wasn't cross trade was in fact a cross trade, and the market rallied in 4 minutes up 5 points. So we'll be patient here and wait for the retracement. The I period just opened up. The thing that's of a concern is the E, the F, the G, the H period have made higher highs and higher lows, yet we still seem to be in a balanced market, so I would assume we're heading down back toward the mean. We're going to find out if that's the reality. Well, there's our fill for out for even. Pretty amazing. This trade at the high of the J period, I actually gave up. I said, I didn't really care what the hell happened. I just wanted to see what the end result was. We're at a $3,000 loss at the J period high, which is above our threshold, and we're out for even. All I can say is have a lot of work to do.